Okay. So welcome everybody. Today is Thursday, and I'm welcome you all to our coaching session. Today is July 11th. So last week we had the 4th of July, which obviously we weren't going to have an event that day. And so just wanted to get started here. We've got a few weeks left in this month and a lot to cover. So go through our disclaimers like we do every week. So just give me 1 second here. Of course, I'm not a licensed broker. I'm not here to give you any trading advice or solicit your accounts. I'm here to give you education on trading, setting up trades, managing trades. You are going to determine the risk that you want to place in your trades, and you're the one that's going to make the determination whether or not you want to place that trade or not. Copying anything I do is not don't constitute as a recommendation. Okay, and if you have any questions about trading and risk in your trading, please call your broker, as I am not a licensed broker. Okay, and of course, if you have any questions, please do email me or call me. The obviously the email Ralph at Omegatrades, and then 55 Omega 88 is the phone number. And of course, if you guys have any questions, please make sure you put them into the Q&A so that way I can share them with everybody or keep them private depending on what you put in. Of course, we teach classes, our options classes, our Forex classes, technical analysis, and our coaching. So if you want one-on-one individualized coaching, please give me a call. And of course, we've got our partnerships with Affinity Trading and Trade Monster and Ninja Trader and Options House. And that's about it. Let's get rocking and rolling here. So the market has been really on a nice upward trend here. And let me see, a couple of questions did come in, so let me just read through them. I'm really surprised, to be honest. I know that every time we've had a pullback, the market has just fended off all this garbage in the market, and it just keeps going higher and higher and higher. And that's fine. Eventually one of these days it's going to have to kind of, reset itself. But you can see over the last few weeks, let me zoom in, we talked about a couple of trades, and we felt that there might be a possibility of a rollover in the market. And so we were looking more of a bearish trades on a few things. So I do want to cover some of the trades that we had taken. Some, they're going against us, so obviously we want to get out. And I was waiting for today to actually show you a few things on them. If your trades are still on, or if you have a trade that your stop has not been triggered yet, please understand that you can also put in a hard stop in the computer, but then also a written stop in your trade plan. And if something changes in the strategy and or something changes in the stock, then you can go in and make an adjustment. So let me go and show you the two trades. Goldman Sachs. We were talking about Goldman Sachs and the drop and the continuation based off of this bear flag. Okay, and it did. We had the bear flag, and then it did drop, and it was doing pretty good for a few days, and then we had a bottoming out, and then now, boom, it's taken me out of my stop. I'm no longer in the trade. That's the cost of doing business, right? It's now no longer making lower highs and lower lows. IBM is the other one, and you can see again, lower highs, lower lows, bear flag, break. It did exactly what we wanted to do really quickly. And then it came up, hit resistance, and it has pulled back down a bit. I do want to show you this on another chart because we did actually, IBM, draft this up. And then there's the trade. And, you can see that it gapped down. It came back up, gapped down again. So the one concern I have here is that we have earnings coming up, folks. And I don't want to hold this into earnings. Even though I feel that this is going to want to continue to drop, I'm not willing to hold this thing into earnings, so I'm just going to close out of this trade. We bought the option at $15.60. It's worth $13.90. So we lost less than $2 per contract. Send, confirm, gone. Now I also want to make sure I come up here and I want to get rid of my IBM. Let's get rid of this. Right click, cancel order. There we go. Right click, cancel order. Okay, so I've canceled everything out that I have on IBM. And then the other one is Goldman Sachs. Goldman Sachs also has earnings coming up. So I kind of need to get out of this thing because, again, earnings are coming up. I don't want to be standing in front of earnings and getting railroaded. So I do need to kind of get out of this as well and lick my wounds and just take the loss and accept it. That's what happens with trading, right? It is what it is. You can see Goldman Sachs here. Here's the earnings coming up, and I really don't want to be standing in front of earnings. We did have that break we were talking about right there where my cursor is. And, you know, like I said, both of them worked out pretty well. But if you notice the last week of the market, let's go to the SPY. You can see the large, you know, move to the upside here. So the market has really drifted everything higher, right? So we've got to be cognizant of that. And we need to be a little more bullish than we want it to be because that's what the market's telling us it wants, right? Your opinion, my opinion, doesn't matter. The market's going to do what it's going to do. And obviously we need to then look at it and say, okay, well, if it wants to be bullish, then that's what we want to follow along is the bullish, you know, the bullish strategy. We, you know, what do you want me to do? I'd like to see it drop. It definitely needs to drop. There's an obvious reason why it should drop, but it just isn't dropping, right? Is anyone bearish on the market now, by the way? Just out of curiosity. Let's see. I got one person saying bullish. Anyone else? I got one person saying bullish, one person saying bullish, another person saying don't know. Okay, that's fair. Anyone else? Bullish, yeah. I agree. I mean, I also want to bring up, you know, a chart with a different company here. Here's our trade monster. Nice run higher. Let me zoom in. I want to zoom this down a little bit. I do want the volume to be lower. There we go. There we go. Okay. So we've had the really nice. I agree. You know, I definitely agree with the cautious. I'm definitely agreeing with that cautious side. Let's see what we got here. So we're up like $3,000 or something. What is this? Today's gain $1,000. I've got a lot of calls here. I should get out of these trades. Let's go trading. Positions. Here we go. That's what I wanted. IWM. I've got the July 97 calls and the July 98 calls. Open market gain $3,600. So what do you say we take profit, right? Let's definitely look to, you know, take our profit here. Just taking a look. Close. confirm, send. And then what do we have over here? Let me go to this one. Close, confirm, send. Go to my orders. Let's see here. Modify. I'll be willing to take a little bit less. Let's just make it a market order. Get out of the market. These are liquid. Send. There we go. And then this one too. Modify. Do a limit order. Market order. I'm okay doing market orders on something like the IWM. It is extremely liquid. So my concern about getting filled, let's take a look at the trading here. Quote. The bid ask is a penny off, folks. Right? So when we're looking at just profiting $3,600 to kind of offset the loss that we took on our other account, when you have something that's split ask, the bid ask split is a penny, and you put in a market order, you're going to get a pretty good fill. Okay? And so I was pretty comfortable taking, that market. Oh, that's the spiders. Let me go to the IWM. Still penny wide, right? 102.35, 102.36. It's penny wide. So I have no problem with placing a trade at market orders. You can see all the way down the line. Let me open up. Here you go. Penny wide. Everything is all penny wide in here. Penny wide, penny wide, penny wide. Here's 2 cents. I'm willing to take that market order. Okay. So are there any trades you guys are looking at? What trades can I help you guys with? Something that you've been analyzing, looking at? I was looking at one last night in a coaching session I want to bring up as well. MU. Yeah, Michael, I did get your email, so we'll go through the ones you are looking at. So let's go to a chart, and we're going to look at MU, Micron. And so, Micron had a beautiful run up here, and now we've gotten it's falling off. Oops, sorry about that. And let me zoom in. There we go. I was wondering where that zoom tool went. A little too close. So we had a really nice run up. We had earnings come up, and really the stock continued to be bullish. And then now, just recently, it's rolled over here, and it's pulled back. And so I'm a little bit cautious on MU here. In order for me to really want to say that this is going to continue in its previous trend, which was up, is to see this thing really get up to about that $14 level up here, $14.40, and then I'd be okay with being bullish. Until then, this might be setting up for a premature bear flag. It's an aggressive side of trading the bear flag, because this is a bullish trend. So if you're looking at this as a bear flag, remember this is also the same thing we looked at with Goldman Sachs. Stock was more bullish, and then this bear flag is a trend continuation. We were being a little more aggressive in getting into that trade. MU is the same thing. It is a little more bullish. If it does set up for a bearish bear flag, it's an aggressive bear flag, because it's remember, a flag is a continuation pattern. So you're not really continuing the bearish trade. You're starting the bear trade. Okay. So I'd be sitting on my hands with this one, and if it got up to about 14 and change, then I'd be looking to pull the trigger bullish. If it breaks down, I'd be waiting for it to break down through about 11.25, to be a little bit more bearish. The other one that came in was UNG. UNG. This one is definitely trending down. Lower highs, lower lows. Okay, let's zoom in. Now, today is a nice entry on a bear flag. Okay, so what we have here is, let me zoom in a little bit. So let me draw a channel. Right there. And let me pull this down. Here's your bear flag. And so the flag starts up here at 21 and change and comes down to 19. So you're talking about a $2 move. See, UNG doesn't move that fast, okay? But I definitely would see today being the bearish entry. $2 isn't exactly a really good amount of movement for me. Let me go to trading and let's go to quotes options. So if I was going to look at this, I'd be looking at the August options, which has 37 days in it, and seeing this thing drop. They are relatively cheap in terms of the options, but the one thing that I don't get here with TradeMonster is the theoretical pricing, so I'm just going to kick back over to Thinkorswim real quick because I do want to show you UNG. And if you were to buy an August, 60 or $1.28 option, $1.28, and it gets your $2 move over the next 2 weeks. So your $1.28 is worth $2.86. So actually, you're going to make $150 on a $1.28 investment. So there's actually a little more, the premium actually is pretty decent here if it does get that $2 move, and today is the entry. So would anyone be wanting to place a trade on UNG based off of a bear flag entry here? And these are some pretty cheap options. So this is what I'm going to do. I'm going to place it in both positions. I'm going to put 2 positions on in 2 different accounts. So we're going to go buy 5 of these suckers here in our paper money account. And then I'm going to go over to my TradeMonster account and show you the same trade. The June buy 5 puts. We're just going to go in right here and just get filled. The bid ask is very tight. Buy to open. Filled, as you can see. So now we have our UNG position. Okay. We're down $2. Oops. And we're only into the trade for $640. I didn't even put a stop loss in on this thing. I will monitor it, but think about this, folks. Again, I'll go back to the Thinkorswim a little bit on this idea. If this does go down $2, it's going to make me $150. The option is only worth $1.28. Now, if I took a 50% stop loss, folks, 50% off of $1.30, let's say, okay, is 65 cents. So in reality, I am risking 65 cents to make $1.50. Okay? So I will monitor this and know that I'll be putting a stop loss in with a 50% loss. Just out of curiosity, where would that stock have to go to? It would have to jump to be worth, let's see. Let's see, if it went up $2, it'd be worth 13 cents. If it goes up $1, be worth 46 cents. So let me take a look here. my stop loss is going to be somewhere around this 1975, which is about 60 cents. I'll look at it again on this other chart. I'm liking going back and forth between the two different charting packages because I do have half the group is split between the use Trade Monster and Thinkorswim. So see on UNG, if I was to get out here, you could see resistance at 20. Going back to here, which, let me get off of this cursor. And then just draw a support line right through there like that. And so that line is at 1985. That's where I would want to be conscious of if I need to get out. I'd be looking to get out at that 1985. Now, so there's a setup right in front of us. Mike, thank you for that. Usually we don't get the setup happening exactly when we're in session. So that's awesome. It traded out exactly what we wanted to see. So we're going to monitor this and see if it goes in our direction. Let's move that down. So yeah, I like that. It's a downtrending stock making lower highs and lower lows, and now it's broken out to the downside on a day where the market is actually up. Right? Dow Jones is up. They're pretty nice, right? Let's go chart. Let's go to the SPY. It's a really nice day in the market today. I mean, we're seeing some significant rallying today. And yep, Mike, that was the other one. I'll show you Mike's. I want to make sure Mike gets credit for this. Clax is the other one that Mike emailed me. This is what's great about collaborating with people and placing trades. C-A-L-X. Oh, K-Lax. Sorry, I say Clax. It's C-A-L-X. Yeah, this is a great one as well. Now, it did break, and it also broke resistance. So this is another one that's really giving us another entry here. Right, it broke 11. Now, the only question I have with this one, we're looking for just a dollar move from 10 to 11. That's the range from support and resistance. Okay? And so now we're breaking through that resistance, which is a buy point, a buy entry. And we're getting a higher volume day. Okay, today's volume is above its moving average. The 20-day, the simple moving average is 250,000. This one is 300,000, 385,000. Now, the one thing I don't like, Mike, I don't think the UNG and the markets are correlated. No, I agree with what you're saying, and I'll follow that thought in a second. What I don't like about this is how low volume this is. Okay, it's not a very high volume trading stock. That's my one concern with this. Its split bid-ask is really nice. It does look to be continuing on the bullish side. The options are not bad. I mean, you're talking $1.40. See the difference in price here? This is a 10-cent split between your bid-ask. Okay? UNG is a penny wide on those puts, or 2 pennies. Okay, so you have a stock that's at $19 and it's 2 cents wide versus CALX, oops, not CALX, which is a cheaper stock, and it's 10 cents wide. So you're going to give up a little bit here to the market because you're going to give up 10 cents right here. Now we're looking for a dollar move, okay? And so again, you know, just because I like to do simplicity, CALX, a dollar move to the upside would mean that our $1.40 is going to be worth $2.05. So we're looking to make $60. If this thing does lose $1, we're looking to lose $1. Okay. Now where would we put our stop loss on this sucker? The problem when something makes such a big move like this is that our stop loss wants to be down here, you know, 75 cents below where we're at. Okay. So that being said, if this does go down 75 cents, we're going to lose 80 cents. Okay. If it goes up the dollar, we're going to make 65 cents. So I do like how it broke. I just don't like the amount of money that I can make. Do you guys see what I'm saying there? You know, you picking up what I'm putting down with that one? I'm risking 80 cents to make 60. Now, on something like that, if you're willing to lose the leverage of the option, you can go out and buy the stock, which would then, you know, cost you some money, but you don't have to worry about that time decay and you can hold on to it. But, you know, even with that, you know, your stop loss is going to be 75 cents, and we're looking for this stock to make $1. So is it worth it to make $1 to risk 75 cents on the stock? I don't think so. So even though, Mike, you bring up a stock that's looking good, it's had a nice pop today, probability-wise, I'd have to stay away from it. Okay? Because I just don't see a good risk-reward there. All right, so Fred has a question. Disregard OKE. All right. Rather buy to open BX August 22 calls. All right, let's take a look. BX. Blackstone. So let's take a look at a chart. Nice run up, and then since this peak here in May, it's rolled over. Looks like it's getting above that descending trend line. Hold on. Let me get a trend line here. So you can see it's finally broken above that trend. Okay? And so we're seeing the stock lift from 21 to 22. It's got the potential to get up to about 23. It's a longer-term bull flag pattern. You know, I can draw another trend line here. Oops, sorry. Zoom out a little. And you can see a longer trade would be to look at the fact that this stock has really had a nice run, and you can probably get about a $3 to $4 move over the next couple of months. Now you're looking for a short-term pop, buying the $22 call, and I would say that that looks good too. Yes, Paul. Yes, how you doing? Good to see you. Yeah, with this brokerage, with Trade Monster, Yes, we're looking at the D for dividend and the E for earnings. So earnings and dividends are out of the way. We don't have to really worry about them right now. Oh, you're welcome. Let me just slide this over. All right. So I do like this here. I think Blackstone, this does make sense. Now, where would you want to put your stop loss is the question. The big thing is yesterday would have been a better entry for this. Today, you're still going to get a good entry, but the issue is not as good, and you're going to have to put your stop loss down here just below 20. So you're your risk reward at this point, if you're not in it, Mike, is, Fred, is, you're going to risk about $2 on your stop, okay? Because there is a good possibility that the stock is going to want to take a bounce off of 20. So just be cautious with that, okay? Getting in now, just be watching this thing a little bit and seeing for that stop, which is really important, okay? Definitely can see the stock hitting its almost $24 mark. That's definitely a possibility. Absolutely. So yeah, I mean, I do like the trade. Again, the only concern is it's got a little bit above its support, so your stop is going to be a little higher than I would want it to be. Now let me bring up trade setup because I actually built one. All right, let's bring this over. So Boeing, what's BA stands for? Here's my ticker symbol joke. Boeing, BA stands for big airplane. So this was a trade that is now a little bit frothy. I mean, we should have taken it a little earlier. So what's British Airways? I don't know what British Airways ticker symbol is, to be honest with you. You can see a really nice run in Boeing. Those Dreamliner issues were really never an issue. And so the thought was to get into this trade on the break here. The entry's already happened. Let me show you. So the entry was at 105.75 with a target of 110.75 and a stop of 103.75. And so I set this up last night. We're at 106, 107 now, actually. So you can see that 105.75 yesterday. It closed at 105.15. So placing an order to get in this morning would have gotten you in on the gap, which would have gotten you in on the low of the day, basically. And you would be up about $1 to this point. Right now, I don't know if I still want to place the trade. It still looks pretty good. Oops, didn't mean to draw it that way. So let's move this down like that. So it definitely is a support line here at 104. Okay. Well, that's a good question. Would I do a spread on this? Well, let's take a look. Let's go to the options on BA. And if I was going to place a trade on it, and I would sell a put, if I went down to the 100, I would get 88 cents, right? So the $100 strike, I'm not even going to get a 1% rate of return if I sold a put. So the put spread, though, is not going to give me a ton of premium. The 105 would. Let me go like this. Let me go here, and I'm going to go and create a spread, and I'm going to go to vertical, and I want to put vertical, and I want to sell it, and I want to analyze that. So this is going to give me a $5 wide strike, but the probabilities are not going to be very good. This is going to be a 49% probability. Right here, you see right here in the middle with with the gray face. We're basically at a 50-50, okay? Because we're risking basically $1 to make $1. You see that? So I'm not too thrilled with risking $1 to make $1 with a 50-50 because it's a decent trade, but it's not a high enough probability. Okay, and typically what I see with Boeing is that they're let me see if I can change. First of all, let's change this to 1. And then let's change the strike to, we're going to sell the 105 and buy the 100. And then analyze. So take a look at the probabilities here. See, this is a probability of 68%. So this is selling the 105, 100 spread. And I like this probability much better. This is selling the 105, 100 spread. So this one wouldn't be too bad. Let me see here. You're getting a $1.33, so that's a pretty decent amount of premium. Let's go and create that order. I can deal with a $1.33 premium. Do this 5 times. Send and confirm. See, look, my max cost is $665. Send. Filled. So now I've got my Bank of America put vertical. Okay. And I've got my directional UNG. So if I go to account, positions, I want to see days left, and I want to see delta, gamma, theta, and vega. There we go. Yeah, I agree with you, Paul. The max profit isn't bad. It's $133, and you got about a 65-70% probability of being right. And the stock is already above the area that you want to be at. If I go look at trading, and I go over to, and I'm gonna place that trade again in the Thinkorswim, just so everyone can get a good glimpse. So you can see a nice uptrend. All we want this thing to do is stay above the support line, and we'll be good to go. Our break even is just under 105. So let's go over here to the Thinkorswim and go to BA, trade 105, sell vertical, 136 to 134. So it's moving around a little bit. And before I send it, I'll hit right-click, analyze duplicate position, and I'm going to go to the August expiration day. and then I'm going to hit send slices to break even. 63 point, so 64%, 66%. They're pretty close, right? I got in at 133, 134. This is at 135. Right, let's 5 of these suckers. Send and confirm. Send. Done. Now, if we take a look at this trade, you can see that I'm long delta about 100 shares. So 5 vertical spread contracts, it's got 100 delta. The theta is I'm collecting 5 cents a day or $5 a day. And then I can look over here at my trade monster positions, and we can see that my BA, not BAC, yeah, Boeing, yeah. What's the plan if BA drops below the 100 next 2 weeks? So let me put that in there to Mike. So the delta on this guy, see there's 142, and the theta is about $5.26. If I compare that to the Thinkorswim application, you can see some similarities. Let me see if I can scroll this thing down. There we go. So BA, Boeing, 101, 99 delta, 100 delta. There's a little bit of a lag between these two. I have them on a slight, as much of a delay as I can, so that way I don't kill my bandwidth. But you can see how close they are. 101.82, 101.48, theta 528, 528, 529, 527. So it's pretty close. If I had true, no, I didn't throttle the speed down, I'd be okay with both of these. Now, the question is, trading chart. And just a reminder that, some people's are on their trial, and their trial is over, so please make sure you get joined up, okay? So if this drops to 100, Mike, this option can only lose the spread width, which is $5. But I brought in $1.30. So in reality, I only can lose $370 per contract if it does drop over the next 2 weeks. But you can see the stock is in a really good uptrend. In order for it to get through 100, it's got to go through my support line of 104, and then I can make a determination when it gets to 104 whether or not I still want to be in it, if it's worth it to stay in the trade if it's starting to break out and now not make higher highs and higher lows. Because the goal here is that we want to see at least stay above 105. So in the next 2 weeks, if this thing does drop, we would be paying attention to the break through our support line. And a break of support would then trigger us to say, let's get out before it gets to 100. You're welcome. So Boeing was a much better trade directionally this morning. Obviously, what we did was we still traded it, but we just traded it with a spread. I'm also going to throw the link in there for you guys to get you sign up through PayPal. Please make sure if you're done with your trial that you sign up with us as a paid member. Okay, I got a few people in here that definitely are off their trials. So you can see that this is a nice trade. We missed it on the call, and this is what's so good, folks. You need to have multiple strategies because the question came in, and let me just make sure I give the right credit here. Where was that? Where someone asked me about doing a spread. Was it you, Paul? Yeah. Paul asked me. I made mention that it's not a good time to buy the call because it already made the move. If you look at the risk and reward, okay, this was a beautiful trade buying the $100 strike or even the 105 strike going into this morning, okay, because the entry was at $3.50 and $4.50. Well, if we look at what those options are being traded for right now, that August 100 is going for $7.85. Okay, the August 105 is going for $4. So let me just bring this up and see, zoom over here. Okay, so my entry at the 105 was $3.15. Okay, $3.15, and now it's going for $4. The $100 entry was at $6.60, and now it's going for $7.85. So if you would have been able to get in this morning on the entry of about $6.60, which you probably would have gotten about $7, either way, you'd still be at break even or up at this point based off of the trade as of this morning. Okay, but it moved a little too quickly, and I didn't want to be throwing this out there and saying, "Hey, place this trade now," because it's moved a little too quicker, a little more. It made the move a little quicker than I wanted it to. But I also wanted to spend some time today analyzing what else we could have done. And Paul, thank you for thinking the same way I am, is what could you have done if you missed your entry on buying the call? Well, you still want a good entry on any trade you bring in there. But considering the put spread and the premium we're getting, it's still a good risk reward and a good probability to put it on right now. So that's why I'm willing to put that trade out there. So this trade, I really don't want to I really can't say I would want to place this trade now. Okay, but it was a beautiful trade to set up. Problem is just because you spend the time setting it up doesn't mean you're actually going to place the trade. PEP is the other one we got coming in. Let's go to a chart and take a look at PEP. PepsiCo. So with PepsiCo, what I find interesting with this PepsiCo trade is that we're hitting that resistance line. Let me throw in a support and resistance line. And I got to move that up. So you can see we're right now breaking out of resistance. Okay? And Mike, I like the idea. It's breaking out of resistance. It's not doing it on high volume. See the volume today? It's below its moving average. It's below yesterday. In fact, it's below any time over the last, let's see, it's 3.5 million, 3.3 million on the 5th, the day after the holiday, which is right there on that green candle. So we're not getting really good volume. I like to see good volume on a break of resistance. Right now we're drifting. However, we're also getting a good day in the market. This one, Mike, you might have to sit on your hands a little bit and see if it comes up, comes back down, does a support bounce before you can jump into the sucker. That would be a little bit more of what I would as back in April, Paul says. Yeah, you can see how it hit its head on resistance. And it did break out. It was looking to break out. Well, actually, the day that it had this high volume wasn't on the break of, well, it was the break of resistance. I apologize. You are right. Let me zoom in. And see if I can, I didn't want to do that. Let me zoom out. Now I'm actually going to use the Thinkorswim chart on this one. That's why each broker has their pluses and minuses. I do like this chart a little bit better. So let me just bring up this right here. Just go to chart, and we are going to go to PepsiCo. So I do like the trade setup. My issue, though, is see that beautiful volume there, as Paul is indicating? That was a break of resistance. If we go back and I go to here, or if you're looking at this beautiful chart, here's higher highs and higher lows, higher highs, higher lows, and you're like, you know what? 79 is a break of the support. If you're a support bounce trader, there's your entry. Okay, if you like getting in on support bounces, you could say if I got in here, I can I want a price line. I can get in on a support bounce, old resistance becoming new support, and there's my entry. And you got it on good volume. Now, what you can also say is, well, you know what? I really want to get on a break of resistance. So when we get up to this $80 mark, I'm all in. And I need to break the $80 mark with good volume to show conviction of the market. And there you go. Okay? Now, let me go if I can see. Let's see if I can get the hour chart. I don't think it's going to go back far enough, because this volume was all day long. Let me zoom out. It's not going to go back for me on the. Let me go to here and go to style. I want 180 days hourly. There we go. So here we go. Here's that break. Okay. Now, it wasn't a gap up or anything like that, so this was something you could get into, you know, when the market opened. Okay. You can see the spike in volume at the open, and you know, you could have taken the resistance breakout and seen that volume in the morning. Okay. Now, let's say you're like, well, I missed it. You could have still gotten in over here at 81, because the entry was at $80.50. So to get in 50 cents over that with the amount of volume you already had by, you know, the afternoon, this is the late part of the day, was still a valid entry. You know, we're kind of superimposing this image here, you know, really zooming in on it and saying, you know, well, you know, what, you know, now you're looking at it, but, you know, after the fact. But if you look at that now versus here, we're getting a really nice break, but you see the volume isn't really fantastic. I mean, it's decent, it's okay, it's not great. What's the target on Pepsi? Well, with Pepsi, you can see that it's made about a from $82 to 84, but even more than that, from 80 to 84. It's hitting into resistance, so there is a $4 move it could make, but it already has made a $4 move, right? So for it to make another $4 move after making a big move today, I'm not saying it's not going to happen. It's possible. Also, remember, the market is up, so we do have a bullish market. So there is a possibility that it would. And so I would definitely see if I could definitely see this making another few dollars up, but I think it would be tough after gapping twice. If you notice, it's gapped twice. It's gapped here, and it's gapped here. And with a big day today, we've got a really good amount of gapping, as well as a really big fat candle. So I don't know. I mean, you know, for this thing to continue running, it's had a fairly decent volume. I'd like to see a little more volume pick up, but I can definitely see another few dollars of a move. But here's the thing. You also have to be concerned with where you put your stop loss. Even if you're thinking there's a $2, $3, $4 move higher, you've got to put a stop loss here at least down about 82.50. So you're giving up about $2 for a $3, $4 move. So is that going to be worth it? I don't know. But just be cognizant of such a large move. We do have resistance coming up here pretty soon, and we do have a big stop loss. So that's why I probably would stay away from this for right now. I would hope that we can get it to go a little higher, come back down, and then do a support bounce holding this candle. So I would put this on your radar to say, you know what? I want to see this thing come back, and I really would love to get an entry of about $84. Boom, right about there. You know, come back down to earth a little bit and then do a support bounce. Get the conviction, get the follow through, right? Have, you know, more of the institutions coming in. This is institutional buying because it is a fairly decent amount of volume because it's not very low and the stock is going up very nicely. But I want to see more institutional buying. I want to see everyone starting to get involved. Okay? So I'm seeing the market wanting to continue higher. Right? We've got about another minute before the close of the day. And I'm seeing that the market still wants to make a nice run higher. We're hitting resistance, and if we break through this resistance, we can definitely see a clearing to go to the next high, and to start seeing some, the way for some more bullish activity. The markets definitely have a bullish tilt to them. Okay, we thought we were going to get more of a breakdown, and we haven't. It just keeps shrugging off everything that's getting in its way, and we're actually starting to get some positive news on things. So that being said, I would continue looking at that. MasterCard's another one. MA. MasterCard's another one that I would continue looking at. So write down MasterCard as a bull put spread. Okay, it's a $600 stock, so obviously I don't really want to be placing it as a directional trade. So you can definitely place a trade here on MasterCard or Visa. Okay, both of them doing very nicely. If you look at RTH, the retailers, they're doing wonderful right now. So ANF, Abercrombie & Fitch, doing pretty well. ARO, Aeropostale, not doing as well. But if you look at the RTH and then go find the stocks that are in the ETF, let me go bring that up. And again, I'll be sending some of the members this list. Let me go to SPX and Sector ETF. Here we go. Hold on. I want to bring this up. So this is, you can see I have some of the financials and who are in some of these major ETFs, industrials, the healthcare, staples. Oh, that one doesn't have the RTH in it. I can go grab that as well. But you can see RTH is doing pretty darn well right now, so I'll find the stocks that are trading within the RTH. I would expect some type of pullback, but Visa, MasterCard, those are two that are looking really nicely bullish. We were talking, I sent you guys an email last week or during the week about Cliff. Cliff was setting up. It was setting up for a bear flag. As you can see, this big red candle, okay, that was when we were setting up that bear flag. Well, the last few days have nullified any thought of a bear flag. It's gone. It's no longer trading to the downside. Amazon is another one to be paying attention to the upside. So upside-wise, we've got Amazon, Visa, MasterCard, Netflix. And there's another one that's breaking out. Okay, this is another one I'd be looking for the bullish upside. Okay. IBM has earnings coming out. I'm going to wait till after earnings before even taking a peek at that again. Yeah, Google. Google's right there at resistance, right? I mean, this thing has just been a behemoth. Look at Google versus Apple. Who you tell me who's winning? Apple topped out at 705, and now it's at 427. Google, oops. Google is at 920. So, yeah, they're doing pretty well. Google's doing awesome. If it breaks the set in the 920, maybe if it gets up about 921, I'd be intrigued to start looking at some vertical spreads. Don't be afraid, folks. Google, don't be afraid. Tell me, what is so bad about a vertical spread? It's a $5 wide strike, folks, right? It's a $5 wide strike. There's no difference between the loss that you can take on a $5 wide strike on a $900 stock and a $5 wide strike on a GE type stock, okay? The risk is still the risk. There's no difference, okay? I would rather be trading a Google and doing a $5 wide strike going over here at the $900 line, 20 points away from where we're at. That's where I'd like to be, okay? Boom, PCLN. Good call, Ron. Look at that, brand new high, right? Again, price line rocking and rolling. I would love to see if this can come down a little bit and give me a support bounce again before I would jump into it. All right. I really like that little bit of a pullback and then get a conviction rebuy. Where's Starbucks at? Starbucks is another one I was really looking at the other day. That's why I like looking at setups. Yeah, look at this with Starbucks. Starbucks broke out today. Today was a nice entry. Again, another one I want to see a pullback before it starts to make a high. Oh, earnings. So make sure, yeah, if you're going to get into a price line, just watch out for the earnings. Thanks, Paul. But yeah, Starbucks is looking good. What is it? Green Mountain Coffee Roasters. You can see Green Mountain has kind of pulled over, rolled over a little bit here. So, spiders. The spiders are looking good. All the markets are looking good. Starbucks is good. Visa, MasterCard, ISRG, Google. Okay, a lot of trades out there on vertical spreads that you can put on. All right, get something with about a 65% probability, just like we did on the last trade we put on. Tesla is another one that's just making unbelievable strides. Just keeps wanting to go higher and higher, even though they can't make money on their cars yet. So what I like about today, where it stopped, is that you can get in tomorrow at about 126. Okay, 125.65, 125.70, right here at this resistance break. And so where this thing stopped today, I could still get in on a fairly good entry because it's the same entry I would have gotten in this morning. Right there. Okay? Any other questions, folks? We will be on for next week, absolutely. Please make sure that if your trial is over, you get signed up. I mean, $80 a month. That's $20 a week, folks. You're absolutely welcome. And we can follow up during the week if you need to. Oh, RKUS. Sure, we'll take one more time at RKUS. Hey, Randy, good to see you. It has had a nice run off that bottom, right? And it actually is looking pretty good for a little follow-through here. We're starting to make some higher highs and higher lows. And I would be really concerned at two lines I'd be concerned at 14, and then 14 at $15, right at that gap, the gap down area. All right, but it looks like we have a little bit. If the market continues doing what it's doing, you're going to get a nice push out of this stock. I mean, a rising tide lifts all ships. This is definitely one that's going to get a rise out of the market, right? I would definitely say, 14 is a nice number to hit, and then check for 15 after that. It's two areas of round numbers that have some areas of some resistance above. If you didn't get in, I know you're already in, so you're just managing this from what's going to do. It looks like it wants to drift higher. All right, folks, I will see you all next week. Send me an email if I can do anything to help you. Again, make sure that, you guys do sign up. Ralph at Omegatrades.com. And definitely go in there. Use the link I put into the chat. I'll put it in one more time. And I'll send you guys an email for the ones of you that are on trials. And you can also see the question that Paul brought in for you, Mike. You might want to take to peek at Bollinger's on RKUS. We don't have time right now to do it, but yeah, definitely take a look at what the Bollingers are doing on this to see if it's compressing in. Okay? All right, folks, I'll talk with you next week. Again, send me an email, and we can follow up on some of those trades. I'm going to look to start placing trades on Visa, MasterCard. Google's looking good. You can, when you hear the recording again, you'll be able to talk. You hear the stocks we talked about. And I'm glad we did place a few trades today. And obviously, even on Boeing, we missed our entry on the directional call, but we were able to get it on a vertical spread. So still, that's a good trade. All right, folks, I'll talk with you soon. Take care.